Yeah, I mean, I started with it, and as I was working construction, it was obviously good pay, but I realized very quickly that the return on capital is much more attractive than the return on labor.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to the Financial Survival Network. I'm your host, Kerry Lutz, and got a great story for you. Pretty amazing. You're not going to believe it. Next guest, Mark Anderson. You went from construction worker to derivatives trader in 3 easy lessons, I guess. You probably took one of those courses that everybody's advertising, how to make money in options. And here you are now running a hedge fund. I take it that your construction work is probably a means to an end, huh?
Yeah, I mean, I started with it, and as I was working construction, it was obviously good pay, but I realized very quickly that the return on capital is much more attractive than the return on labor from tax perspectives, from time perspective, from scalability. So I just started taking more of an interest in investing in financial stuff. I did a lot of real estate, didn't like that. And then I realized that most everything out there was basically just kind of hype and salesmen that just jumped from different things. So I wanted to create something that was real and actual fun.
Aha. Okay. So, it's kind of a fascinating transformation here. You went from blue collar to white collar. You must have had some interest in this. How'd you get into it? I guess is really the question.
Yeah, I mean, I was young. I had a lot of energy and a lot of time. And then I'd always been familiar with what options are. My dad had traded options, and I was kind of exposed at a young age. And then I stumbled upon these things called 0 days to expiration options, which are options that are put on when the market opens at 9:30 and then expire when the market closes at 4 p.m. And I really thought there was something there with not carrying risk overnight and being able to always quantify your loss with liquidity and in order throughout the day. So I just got really obsessed with it, and then it took off. And the main thing is, just because someone goes to Harvard or does whatever doesn't mean they're more well suited to do what you do. It's basically just a mindset of what people think is capable.
All right. Okay. So we got to get into this here, because don't 90% or 95% of all people who trade in options lose money?
Yeah, I believe it's 99%. I actually really like this question because the average American is 35 pounds overweight, $10,000 in debt, and has less than one close friend. But we don't go around and go up to someone with a six-pack and say, don't you know 99% of people are overweight? It's impossible that you have a six-pack. How can you do this? Don't you know that the market's efficient and you can't have a six-pack? But we seem to like to do that to people in the financial space. Or the other thing is 90% of businesses fail within the first 5 years. But we also don't tell people, how's it possible you're running a profitable business? It's efficient,
Yeah. Okay. I'll buy that.
Yeah.
But let's face it. It's one thing 99%. That's even better than the government's conviction rate for criminals. How is this done here? You're defying the odds completely.
People psychologically can't get out of their own way and don't put in the time and dedication to achieve what they're trying to do. So the way I think of it, I actually saw this YouTube video the other day where it's the guy that invented the bulletproof vest got shot in the chest 180 times. And that's what he would do basically in all demo do stuff. And it's those are the people that succeed, that have enough conviction in their idea that they're willing to go first, put it in front of it, and they're willing to put their money where their mouth is, and they directly put their value that they offer in front of their clients. And then also the reason 99% of people lose is because trading is indefinitely scalable. So I could do $100 million instead of $10 million. It would require no more work by a good strategy. So it's just inherently a winner take all game. which obviously eats up the rest of it. It's more of a pure form of capitalism. Right. I would say real estate is more of a, especially single family real estate or rentals, is a how to not lose game rather than how to win game. You don't really see people buying a government financed loan in a single family home getting rich,
Mm-hmm. Okay. So, but is this something you could do at home, or is this something, there should be a warning, don't try this at home. Only professionals are engaged in this kind of activity. That's my...
anyone could do it. All you would need is 30 grand to not have pattern day trading rules, which is just a rule by the government that says you can't trade options on the same day more than twice a week if you don't have a 30 grand account. So there's really no barrier to entry of anyone that could do it. It would just be, are you willing to put in the time to do something and learn it? Like what I like to say is I'm giving away the secret, selling the implementation. So I release everything on my YouTube channel and you can go ahead and look at it and feel my strategy and do whatever you can. The main underlying thing though is, since you didn't read all of it, you didn't put in the work, if that goes up and down a little bit, you're probably going to struggle with your conviction to follow through and actually do it. So that's most likely what's going to prevent you from succeeding.
So what's the worst hit you've taken in your training here?
The worst hit I've taken is an 8% drawdown. So from my all-time account high value, I lost 8% of my account over the course of about 2 weeks. But to make it sound cooler, I've lost, it was about $1 million. So that's a big number, but not a big percentage. But the percentage is all that really matters. So about half as much as the average down year in the index.
Mm-hmm.
So for example, this year, the biggest drawdown from a high in the NASDAQ was 18%.
So what's like, when it happens here, when you take these losses, what is generally the cause of it?
It's usually just a big reversal. So let's say during the day, the market goes up all day. My computer's selling puts, so that's bullish on it. And at the end of the day, it just drops like 1% or 2% for no reason.
Right.
But again, all of these are statistically managed in. So roughly 2% of the time that's going to happen. So that happens about once a quarter.
Okay. So what if somebody wants to exercise the option, right? These options get settled in cash, right?
Yeah. S&P 500 options, which is at the PX, are all European options, which means they're cash settled. So no one can assign it to you.
Right. So there's no delivery per se other than paying the loss, right?
Correct.
Got it. That's what I thought. That's fascinating. So while you can't lose a lot, you can't really make a lot either.
So essentially, yes. But the fact that these are put on daily, the compounding is where all of the edge comes from. So the example I'd like to give to people is that if you're 100 grand in real estate debt and you have a 10% rate, you'd owe 10 grand at the end of the year. But if you're 100 grand in credit card debt at a 10% rate, that is compounded daily. So you end up paying about twice the principal over a year period when it's compounded daily versus when it's compounded yearly. So eventually, this is where the real edge is that mathematically, it's not even just if I could do the same return as the index every day, I would get double the return at the end of the year because it's compounded daily.
All right. And do you keep investing more money in? How does that work? Or do you just, how do you do that exactly?
Yeah. So basically, it's just all based on math. So I sell about 1% of my account value in credit per day. So if I have $1 million account, I sell about 10,000 in premium a day. If I had a $1.1 million account, I would sell 11,000. So basically, I'm taking the same percentage risk each and every day. So mathematically, on a percentage basis, it makes no difference whether my account's larger or smaller. It's just purely on a percent return.
Really interesting. Really interesting. So how do you get involved in this? Can we invest in your fund? Is that doable? And what kind of returns have you gotten in the fund over the past since you're in it?
If you're interested in it, you could look at my YouTube channel, 0 Day Mark. I basically break everything out. Got a link to some backtesting software if you'd like to pull that and play it for itself. If it sounds like of interest to you, I'd be more than happy to speak with you. But yeah, you could actively invest in my fund. Just find me on LinkedIn or my website, whcapitalmanagement.com. Mm-hmm. And then you can basically discuss it to be aligned with basically my clients and everyone. I offer 100% liquidity, so you can take your money out whenever you want. And I'm currently targeting 40% yearly return and a 10% quarterly return. So you can basically know if I'm full of shit, and you could see the returns on a day-to-day basis of if I'm meeting that target. That's regardless of what happens in the market. If the market's down, up, sideways, down 20%, up 20%, still the 10% quarterly return, still the 40% yearly return.
So you don't really care what the market does, right?
Now, in statistical terms, we're 0.22% correlated to the market. So basically random.
Got it. Yeah. So it's just really irrelevant.
Yeah.
Got it. All right. Fascinating. And hey, appreciate you coming on. Can you tell us where we can find you? Give us links, website, whatever.
Yeah. You can find me at mbhcapitalmanagement.com or look me up on LinkedIn, MBH Capital Management, and you see Mark Anderson under there. I've also got a YouTube channel under 0 Day Mark. It's basically where I'll post kind of my thought process, things I'm doing in general in relation to trading, to just kind of educate people and give people a better perspective on it.
All right. Hey, well, I like it. Got any questions for Mark, myself, shoot me an email. Link to a site be in the show notes to this interview on financialsurvivalnetwork.com. While you're there, please sign up for your free newsletter. Hey, definitely want to have you on again and go more in depth into this and really get some real life examples. And what else can we say? Well, that's about it. Appreciate you coming on. We'll talk to you again soon.
Appreciate it.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.